Well, it's another case of the rising dragon versus the mighty elephant. Markets in China and India have gone their separate ways since the start of the year, a tumultuous period to say the least, marked by political uprisings in the Middle East, the disaster in Japan and the recent surge that we've seen in commodity prices. A survey conducted by Russell Investments seemed to highlight this trend. 55% of money managers polled are bullish on China, a far cry from the 9% who are bullish on India. Let's talk more with Sarah Lien, Senior Research Analyst at Russell Investments, joining us live from the SGX. Sarah, these are quite interesting poll results because, at the start of the year we were talking about how Asia was certainly, and emerging markets were certainly the preferred choice of investment destination. That did seem to change as we started off through 2011, but according to your poll results, it certainly is still the same. The majority, I think 63%, say that Asia is the most attractive investment destination right now.
That's right, Oriel. Even though developed markets have surpassed emerging markets in terms of performance year to date, we've seen in our survey results that actually investors are very positive on Asian markets and are differentiating this part of the world versus other parts of the world in our inaugural survey that was just released last week. Russell Investments runs an investment manager outlook survey in the U.S. and also in Australia, and we've been doing this for a number of years successfully to identify contemporary themes among investment managers that we know. And what we've done now is launch a new survey for the Asian region, and the results are quite interesting. Like you mentioned earlier, China was identified with 55% of the respondents being bullish on this market as really the key investment opportunity in the region. And Korea as well got very positive marks from our investors. Korea was at 45%. And then markets like India and Indonesia were actually on the bearish side, with 59% of the respondents bearish on those two markets.
Why do you think that there's such a wide split, Sarah, between what we're seeing in China and what we're seeing in India, given both of these investment destinations are really seen as powerhouses?
Yeah, that's right. I think for China, the key theme that came out of our survey and also from our discussions with managers is a theme of domestic consumption. In China, we've heard a lot about the government's 5-year plan, how they're really focused on boosting domestic consumption, how they're focused on third and fourth tier cities in China, trying to build out the West and build out central parts of China versus the more developed areas. And with that comes some strong bullishness towards areas like financials and consumer stocks that managers are differentiating in those markets. India, on the other hand, is also facing some pressures. Both markets have experienced tightening by the government, and also they've had a lot of scares regarding inflation. But I think with China, there's more investment opportunities, whereas in India, the managers are still concerned. There's been corruption scandals in that market. There's been concerns over agricultural inflation and high commodities prices that China is addressing probably better than India at this point in time.
So it's about, I guess, growth levels going forward. You mentioned financials, consumer discretionary, consumer staples, the most positive sectors that fund managers have really highlighted. Interesting when it comes to consumer staples, because I know certainly there are a number of analysts that have talked to us on this particular program about the warnings over margin pressure when it comes to some of these plays, in particular in the consumer space.
That's right. With higher resource prices, higher input costs to these companies, margins certainly can be squeezed. What the managers that we speak to are saying is that they're trying to find opportunities to invest in companies that are actually able to pass on any price increases to the end consumer. These are products that have strong brands, that have strong pricing power, that have more stable earnings. And even though there are some pressures in the sector broadly, managers are finding select buying opportunities to park their money at this point in time.
Okay. Sarah, just very briefly before we let you go, it's also interesting to take a look at the risks and the challenges that these fund managers are looking for. I notice, as you would expect, inflation is a significant risk.
Yes, inflation got flagged as the biggest risk among the survey participants. 86% of our respondents actually highlighted that inflation was their number one concern. And I don't think this is any surprise. This has been well publicized across markets, and China, India, Indonesia. These are markets that are very much affected by inflation, because in this part of the world, inflation and food price inflation in particular is very relevant. It's a very big part of CPI in these markets.
All right, Sonia, apologies for interruption, but I do need to interrupt as we are up against a hard break. Great to have you with us today. Thank you so much for joining us.